Life isn't about waiting for the storm to pass. It's about learning to dance in the rain. It's about removing fear in any given area of your life so that you can enjoy life more fully. Investing can be pretty overwhelming with so much information out there, and there's just so much volatility to it. But, jumping in and learning about investing can really help you remove those fears. When most people think about investing, they're thinking about active investing and short term wins like maybe individual stock picking or mutual funds. But another approach that seems to be the secret sauce to build wealth is passive investing, which doesn't get much attention, but there are a lot of millionaires that have built their generational wealth because of it. So I want to spend a little time here in this video to talk to you about both active and passive approaches to investing and the difference between the two as strategies and an area that maybe you can explore further to build generational wealth. You're going to learn the different approaches that can help you make better decisions and increase your confidence in your finances. My name is Yvonne, and the goal in this channel is personal growth. So if you want to improve the quality of your life, click the subscribe button to level up. Some people think that active investing, like investing in mutual funds, is the way to go. But in his book, Money Master the Game, Tony Robbins shares that an incredible 96% of actively managed mutual funds really fail to beat the market over a sustained period of time. So when you understand the difference between active investing versus passive investing, that's really going to help you make the best decisions for the lifestyle and the kind of investor you want to be. You work hard for your money, and it's really important for you to do your research and seek expert advice and really assess your risk tolerance and see what investments are right for you for your personal situation. So let's get right into it. What is the difference between active and passive investing? Well, active investing takes a hands-on approach, whether that person is managing their portfolio or paying someone to professionally manage it. And the goal of active investing is to beat the stock market's average returns and take full advantage of short-term price fluctuations. It really involves a deeper analysis and the expertise to know when to pivot into or out of a particular stock, bond, or asset. You see, active investing requires analyzing and investing for price changes and returns. On the other hand, if you're a passive investor, you're going to invest for the long haul. Just like the name suggests, passive investors really limit the amount of buying and selling within their portfolios. And this makes it pretty cost effective because they're not hit all the time with all the fees that come with buying and selling. Now, the passive strategy requires a buy and hold mentality, which most people find it difficult to do because, it takes, I think, emotional maturity and resilience to be a passive investor. So you think, oh, passive, it's just laissez-faire, but that's not true. The passive investor has more emotional intelligence and resilience because whatever's happening in the market is not affecting their decision to stick with it for the long haul. I hope that makes sense. So that means selecting stocks or funds and resisting that temptation to react or to try to anticipate the stock market's next move. The best known example that I can give you of a passive investing approach is buying an index fund that follows a major index like the S&P 500, Dow Jones, or NASDAQ. Now, an index is simply a basket or a list of stocks. An investment fund really doesn't try to beat the market, but really mimics or matches the market. Okay? So you're not trying to beat it, you're trying to match or mimic it. So it's really aligning yourself with the market instead of trying to beat it. And this saves investors a lot of time in trying to pick a winner. And successful passive investors invest for the long term. And again, they don't make emotional decisions like selling their stocks when the stock market goes down. They really understand the cyclical nature of sharp downturns and don't make emotional decisions when the market experiences short-term setbacks. I'm sure you've heard in the media or even your friends or family talk about, oh, the market's down, the stock market's down, I'm going to go do this or I'm going to go ahead and do that. And they're really in this roller coaster, just riding everything that's happening on a day-to-day basis. Well, that's not the case with the passive investor. They're not riding the waves of this roller coaster because, first of all, they understand right from the jump that this is a cyclical experience, okay? This is cyclical. So instead of being in the roller coaster, right, and experiencing the ups and downs and the waves and the highs and the lows, no, they're on the sidelines. They're just kind of passively watching everything happen, and they've got a plan and they're sticking to it, okay? Because they know that ultimately they're going to win in the long run if they hold on. And the trajectory historically, and there are many books that reflect that, particularly the one that comes to mind is the Little Book of Common Sense Investing by Jack Bogle. He also mentions that over the long term, these indexes have proven to be consistent, and people have been able to really reap the benefits in the long term. So what are the top stock market indexes? Well, the stock market indexes are indicators for global and country-specific economies in the United States, and they include the S&P 500, the Dow Jones, and NASDAQ. Those are the top 3 most followed indexes by media and investors, so we'll stick to those 3 for now. Now, the Standard & Poor's 500 index is commonly known as the S&P 500, and that's very popular. It's an index with 500 of the top companies in the market in the U.S. The Dow Jones Industrial Average includes the stocks of 30 of the largest and most influential companies in the United States and is known for listing the U.S. market's best blue chip companies with regular and consistent dividends. Now, the NASDAQ index is most recognized as the exchange where there's technology stocks like biotech, software, semiconductors, things like that. And they're traded including companies based outside of the United States. So something to keep in mind. For many investors, a portfolio of low-cost index funds is the best approach for a percentage of their investments because, they don't know what stocks are going to perform moving forward. They don't know which one's going to perform best. So they also have a percentage of their portfolio that just mimics the market, okay? And truly, the bottom line is this. Owning an index is passively owning the market. Okay, so let's go on to what are the advantages and disadvantages of each of these? Well, the advantages and disadvantages of passive investing. Let's start there. So I want to share 2, just to keep it brief. So the advantages include, first of all, ultra low fees. It's much less expensive because passive funds simply follow the index and no one is out there picking the funds because it's pretty clear which assets are in that index fund. They're clearly listed. Secondly, tax efficiency. A buy and hold strategy doesn't typically result in a large capital gains tax for the year. Now let's talk about the disadvantages of passive investing. The disadvantages include, a lot of people argue that it's too limited. Passive funds are limited to a predetermined set of investments. So, investors are locked into these holdings no matter what happens to the market. Also, too, the second disadvantage is small returns. You see, passive funds mimic the market and they don't try to beat the market. I want to be very clear with that. They try to mimic the market and mirror the market. They don't try to beat it. So inherently, you're never going to have significant returns that active investing gives you, unless, of course, the market overall is doing well. So now let's turn to active investing. What are the advantages and disadvantages of active investing? Well, first of all, it's pretty clear that it's flexible, right? So active managers, they're not tied to a specific list, and they can buy any stocks they believe are going to do well. So that gives you that freedom. Also, too, the second advantage is hedging. You see, active managers can also hedge their bets against various techniques, such as maybe short sales or put options, and they can also exit specific stocks or sectors when the risk becomes too big. How about the disadvantages of active investing? Well, first of all, it's very expensive, okay? So fees are higher because all of the active buying and selling are going to naturally trigger transaction costs. So all those fees over decades of investing really can kill your returns. Also, too, it's risky. You see, active managers are free to buy any investment they believe meets their criteria. So, inherently as humans, they're going to make costly investing mistakes. They may be able to think that something's going to do well, and in the end, it doesn't do as well as they thought. So, at the end of the day, the goal of investing is to get the maximum return with the lowest possible risk, no matter what approach you choose. And it's not to say that, you need to pick one. You can have a combination of both. That also can work too for you. But ultimately, in investing, there are many different approaches that I want to make sure you walk away from this video understanding. That there's different approaches and different strategies that help you set yourself up for financial freedom. But let's be honest, it can be overwhelming to just do this on your own. And see, that's why I've designed and created my signature Money Mastery program. You see, traditional personal finance education tends to focus on the facts and numbers and ignores all of the inner work, mindset, behavior, and transformation needed to build lasting results. It's more than just creating a budget. It's creating a lifestyle to build and keep wealth. You see, to build wealth takes a certain set of skills. And to keep your wealth is also a completely different set. So this Money Mastery program really encompasses both so that you have a holistic approach to your personal finances to really set you up for success. So if you're ready to invest in your financial education, this course is for you because it's going to teach you what school never taught you. And I have a master's in business administration, and none of this stuff was covered even at a master's degree college level, okay? So you're getting the best curated information that combines the full picture of personal finance and helping you to create a personalized financial action plan. So again, this program is curated especially for those that are ready to upgrade their mindset for wealth because it starts in the mind. So we're gonna really delve into that. And I'm gonna be honest with you, it's not for everyone. It's an exclusive experience for high achievers that are committed to their transformation to get out of debt, save more, increase their income, and invest to build generational wealth. So if you're ready to live a life of financial prosperity on your terms, click the link below in the description box to enroll, and I'll see you on the other side. Also, check out my Goals Mastery program if you feel the need for more clarity in life. There's something more for you, but you're not sure what. Well, this course is going to help you to get clear with what you want in life and to help you identify, define, and align with your vision, mission, and goals in life. Also, it's always great to really have inspirational and motivational reminders to keep you moving forward towards your dreams and goals. So click on the link below to choose your favorite custom design gift for yourself, family, and friends on my online merch store. And if you enjoyed this video and want to improve the quality of your life, click the subscribe button to level up, and I can't wait to see you on the next one. Oceans of love. Till next time.